Hello students, Assalamu alaikum. This is Syed Kambaraza, and on behalf of ACCA, I welcome all of you to this practice to pass webinar conducted by the ACCA. Uh, just as an starting point, uh, this is the 5 days practice to pass webinar of the TX session, which starting from today, that is 22nd August, and will be end up on 26th August. Timings would be from 8 p.m. to 11 p.m. PST. Here is the brief profile of myself. I am Syed Kambaraza, working. I'm working. That's fine. Now I'm working as an senior manager in finance department in the Standard Chartered Pakistan, which is an ACCA Gold approved employer, and I have more than 12 years of teaching experience in various ACCA approved tuition providers. Currently, I am associated with Tabani School of Accountancy, which is a platinum learning partner. And Alhamdulillah, we have always produced good results in taxation papers, including worldwide and nationwide positions. Uh, After this, a brief introduction of myself. Uh, let's look into the paper format. The paper format for the TX paper is the paper is divided basically into two sections. First section is purely the MCQs area, which is one section, 15 MCQs, 2 marks each. It can be from any area of the syllabus. Section B has 3 MTQs, and MTQ refers there would be 5 MCQs in one MTQ. So essentially, overall in section B there would be 15 MCQs again. One MTQ would be from capital gains, either it can be individual or it can be company. Second would be from inheritance tax, and third would be from the value added tax. So these three topics you can say for sure comprise at most minimum side 30 marks of the paper, whereas on the upper side obviously it has some contribution in the section A as well, and on average you can say 3 to 5 MCQs from this area. 3 to 5 MCQs means 6 to 10 marks. So if any one of you candidate cover these three areas, these three areas of F6, so for sure he or she would gonna score at least not perfect. That's better. He or she would gonna score 36 to 40 marks. He would be able to attempt 36 to 40 marks. So give respect to these topics accordingly. Like they are the ones who would support you to score somewhat 36 to 40 marks in the paper. Then section C of the paper, which is of 40 marks, section C would consist of 3 CRQs. CRQs refers constructed response question. In the CRQ, there would be 3 questions, 3 CRQs. There would be 3 CRQs. First CRQ would be of 10 mark. It could be from any area of the syllabus, any area. That could be capital gains, that could be inheritance tax, that could be VAT, value added tax. By the way, this thing in abbreviation is called as CGT. This thing in abbreviation is called as IHT, and this thing in abbreviation is called as value added tax, that is VAT. This 10 mark could be from any area of the syllabus, like this one, section A. So it can be from uh, VAT, income tax, capital gains tax as well. So if examiner is in a good mood to test this area, it can be examined here as well. One CRQ, 15 mark from income tax for sure. For sure. One area would be from income tax, and there would be one CRQ from corporation tax, which would be of 15 marks. Okay. By the way, this CRQ can be from this income tax and corporation tax as well. So this CRQ can be from any area of the syllabus. It can be from here or here or here or here or from here. So it can be from any area of the syllabus. The MCQs on the minimum side, 3 MCQs would be from this area. So on average, 10 to 12 MCQs are from income tax, corporation tax, and there is one more area which is not like max 1 to 2 MCQ weighted, which is like the legal system or the tax system of UK, how the tax system work, who prepares the tax, what are the authorities and responsibilities of the tax authorities. So these kind of stuff. Uh, then after discussing the paper format, by the way, uh, after discussing this paper format, I like to move ahead. Then I have some of the few key advices for passing the paper. First key advice: read the question very carefully. Read the question very carefully. What the examiner wants to ask, what is the exact requirement. A most common type of mistake which students do is they do not read the question properly. Like just quoting an example, which of the following, like based on the given scenario, Mr. A is treated as UK resident, assumingly the conditions for residency are met. ABC are the conditions. Conditions for residency are met. Based on the given scenario, Mr. A is to be treated as UK resident. This statement is true or false? This statement is true. Based on the above scenario, Mr. A is not to be treated as UK resident. This statement is true or false. Now, I have checked all of the situation. Mr. A is UK resident. As I read the statement based on the above, Mr. A UK resident, I marked tick blindly. No. Read the question carefully. Like if this is a positive statement over which you are going to answer, whether it is a negative statement. So read the question carefully, think, and then address. Because keep remember, mark my words, rectifying the answer takes more time as compared to read and plan and one time addressing the answer. So try to attempt the question once, but it would be perfect. Effective time management. Effective time management with respect to total marks per question, with respect to sub marks of the question. What does it mean? Like, take it in this way. If you have one MCQ, one MCQ means 2 marks, and 2 marks means it should have to be done within 3 minutes. Within 3 minutes. So it should have to be done within 3 minutes. Or if there is a CRQ which is of 10 marks, it should have to be done in 10 minutes. Sorry, it should have to be done in 18 minutes. So planned, because if you overrun the question, for sure it would definitely gonna take the time of some other question, and at the end of the day you would not be able to complete the paper. So plan your answer, make effective time management, plan out what is the total marks per question. Like if the question is of 10 marks, it would be for sure, you would be for sure giving it no more than 18 marks. Make a 10% buffer, make a 10% question, but do not go for more than 10% question. Okay, like if the question is of 18 minutes, make a 10% question, give it a 20 minutes, but not more than 20 minutes. Allocate the marks to sub parts of the question as well. Sub parts of the question as in like uh, the overall requirement is of 10 marks, I know, but it can be divided into part A, part B, part C, part D. So read the question carefully. If the question is of, make it 2 marks. If the sub part is of 2 marks, then do not spend more than like 3.5 minutes over that requirement. Because if you like, this is the baby element of this. If you do not tackle out this thing will slip out of your hands. So to keep this thing in your hand, you have to manage this thing first, then this thing will automatically will be in your hand. Second, hands-on technical knowledge of TX. So at times the examiner comments, it can be clearly evident that students lack of the technical knowledge, or student do not pick up the release, pick up the situation, do not aware of this concept properly. So this thing shows that there is lack of technical knowledge. Technical knowledge in two aspects. One, you should be aware of the technical stuff, like make it in this way. Uh, you should be aware of the conditions of any of the capital gains tax relief. Let's say, for example, just knowing the relief is not enough. You should be able to apply that relief as well, like how to apply that relief in a given scenario. That is also a part of this. You should have the hands-on knowledge. Okay. Then have good practice on computer to solve the questions. Like normally there is a common complaint from the students that we are good in doing the paper via pen on a hard copy, but I don't know why we are not able to complete the question on the computer. We are not able to complete the question while doing the paper. So the indirectly the key point from this thing is they do not practice well on the computers, because if you do not familiarize yourself with the ergonomics of the computer, how would you be able to solve a paper considering the fact that your paper is based on computer? So if you know the technical stuff, if you know how to calculate the text, but if you don't know how to solve it on a computer, honestly that knowledge is useless, because you would not be able to apply it on computer. So uh, as an advice, day one advice from my end, please keep practicing on computer as well, specifically the CRQ part, because uh, the CRQ is like main technical area, as in the sense that it requires a lot of the working references as well. So focus on this thing as well. Then after this, read technical articles and examiner reports. How many of you read the technical articles? An honest answer. Mm. How many of you read the technical articles and examiner reports? Is it like no one? No. Okay. No answer means I take it as no one. Okay. So please make a practice of reading technical articles and examiner reports. If there would be an issue regarding that, you can do let me know. I will share the technical articles, examiner report with you guys. But that's important, because from examiner reports you will come to know what are the errors, what are the mistakes which were made by the previous students, and if any of the mistake is made by the previous students, uh, do not avoid that, because these are the like known errors kind of stuff. Read technical articles. By reading technical articles, you can come to know about the current mindset of the examiner. What is the mentality, what the examiner is thinking nowadays. So like that's a good reading thing, uh, technical articles, but that should not be at the end of the at the start of the session. That should ideally be at the mid to end of the session. Session as in once, like these days, once you are done with your studies. Anything to ask or clarify from the uh, key advice type thing? Anything over which you want clarity? Okay, these are the this is the trend of is F6 passing ratio. Like if I look into the March, it is 46%. December, September, June, then March. So roughly speaking, if I take the regression run, calculate the beta factor of this graph, then I can for sure say the beta factor would be the 49%. So the weighted average pass rate of the ATX is, the weighted average pass rate of the TX is 49%, which is a fair good percentage in the ACCA. Well, so, but the interesting thing is, if you guys notice, March 20, March 19, March 18. Thank God it's not March now. It's basically the uh, September attempt. So in September, if I look, so September 48, 51, 49. So September has a history of generally better than the March attempt. So that's a good news for you. Uh, this is the day-wise plan of the TX this webinar session. Day one, we would be going through the capital gains tax, capital gains, which includes the individuals and companies. Tomorrow, that is on 23rd August, we would be covering the inheritance tax and VAT. On 24th, that is on Monday, inshallah, we would be covering the income tax. 25th August, we would be covering some portion of income tax, probably the practice question, plus the corporation tax. 26th August, we would be covering the corporation tax, the questions element mainly, plus the tax planning area. This tax planning area is basically examined in, mainly this area is examined in 10 mark CRQ question. By the way, any one of you attending this webinar who is attempting this TX session for the second time, uh, or more than second time, would appreciate if you share your the reason for this second attempt, or later, like more than second if any, so that I can share those experience with your fellows. If there is any, no one? Okay. Okay, so what is the cause? Yes, timing would be same, like it would be from like I mentioned here, it would be daily on 8 to 11 p.m. Yes, we would have, and I would be sharing the WhatsApp group link with you guys shortly. So yes, there would be. I would be making the WhatsApp group and would share the link with you. And after that, that would be a joint decision. So it would be a joint decision whether we want to keep it or we don't want to keep it. So we'll discuss over that thing later, like after the exam, not now. Yes, recordings would be available uh, at the ACCA website, so you can access that. Yes, yes, I would be sharing the link with you. Okay, so recording would be available later on, not right now, but that would be available for sure. Okay, moving ahead. So before moving on to this screen, I have taken so many questions. So I believe that I'm good to move to the good to move. Well, so this is the basic introduction for the for this session. Let's quickly look into the day one agenda. The day one agenda is capital gains. Revision topics include capital gains, which includes all of this list. I'm not going to take the name of this list, and the capital gains of chargeable gains of companies. So this would be the agenda for today, and I would be targeting MCQs and MTQs as well. By the way, one further thing I forgot to mention earlier that going forward, like from today and onward, we would be solving at least one question, at least one question per day on the ACCA provided platform, the ACCA provided platform pattern, so that we would be familiarize ourselves with how to use the scratch pad, how to use the calculator. As I understand, as I understand that many of you people would be taking the exams remotely. So for remote exams, considering that would be in my opinion, that's very important to familiarize yourself how to use the that pattern, because you people are maybe you people would be like used to of the attempting the CP, but always you have a hard, rough working paper and your own calculator with you. But this time, especially those who are appearing for the remote exams, so uh, that's why we would be attempting, or we would be attempting this. Okay. Well, so MCQs and then the exam questions. Let's start with the revision session of the day one. Let's start with the revision session of day one, which is the about capital gains, like I marked earlier. For capital gains, three things: chargeable asset, chargeable disposal. Chargeable asset. Chargeable asset means the asset over which we are supposed to pay the capital gains tax. All assets are chargeable, like we have to pay capital gains tax on every of the assets, except exempt assets include cars, non-wasting chattel bought and sold for less than 6,000, wasting chattels, cash, qualifying corporate bond, sterling currency, principal private residence if occupied, asset held in individual saving account without any limit. Because keep remember, for individual savings account, there is a limit of 20,000 for the income thing, not for the assets thing. Chargeable disposal. Chargeable disposal means over which disposals the capital gains tax is applicable. Chargeable disposals are sale of asset, gift of asset, exchange of asset, loss or destruction of asset, compensation for damage. Whereas exempt disposals are sale of trading inventory, exempt from capital gains, transfers on death is exempt from capital gains, and transfer to charity is exempt from capital gains. The exempt assets chargeable disposal list is important fairly. Then moving ahead, rate of capital gains tax. Rate of capital gains tax depends on amount of taxpayer total taxable income. If total taxable income and gains are less than upper limit of basic rate band is 37,500, then capital gains tax would be at the rate 10% and 18% of residential property. To extent any gains or part of gains exceed basic rate band, that would gonna tax at the rate 20% and 28% if there is a residential property. Basic rate band extend for the gross gifted and personal pension contribution as always. So basic rate band would be extended as per the normal procedure. Then the discussion over the part disposal. Part disposal. The concept of part disposal arises whenever you purchase a larger asset. The Finance Act 2019 would be applicable this time. Calculator not allowed. Like normal calculator which you used to carry is not allowed. You have to use the calculator provided softly on the ACCA thing. The concept of part disposal arises whenever you purchase a larger asset and dispose of that larger asset in multiple small parts. On that, in every that situation, there is a concept of part disposal. For example, you purchase so the concept of part disposal, the examples of part disposal could include you purchased a 10 hectares of land and disposed of, for example, 3 or 4 hectares. You purchased a building of, let's say, 10 floors, and you have disposed of 2 or 3 floors out of that. So in every such situation, there would be a concept of part disposal. Over the part disposal concept, the issue is not to calculate the disposal proceed. The issue is how to calculate the cost of part sold. The cost of part sold is calculated by a formula, which is cost, that is purchase price, into A divided by A plus B, where A is the proceeds amount, like the market value of part sold, you can say, divided by market value of remaining asset. And if from total cost I deduct, if from total cost I deduct the yes, if from total cost I deduct the cost of part sold, then I would get the cost of part retained. Then the second discussion, chattels. Chattels are tangible and movable asset. So anything chattels, wasting chattels are tangible and movable assets are called as chattels, and tangible and movable. Chattels can be divided into two categories, wasting, non-wasting. Wasting chattels are the one which have expected useful life of less than 50 years. Less than 50 years. Exempt. For example, plant, machinery, any of the thing. If the chattel asset is tangible, movable, and life is more than 50 years, such chattel is called as non-wasting chattel. Non-wasting chattel, you have to look for the cost and sale proceeds. If the cost is 6,000 or less, more than 6,000, proceeds 6,000 or less, more than 6,000. If cost proceeds both are less than 6,000, then such non-wasting chattel is exempt. If cost is more than 6,000 but proceeds is less than 6,000, then you would have allowable loss based on deemed proceeds of 6,000, and this 6,000 would be gross proceeds. If your sale proceeds is more than 6,000, cost less than 6,000, normal gain computation, but gain restricted to 5 upon 3 gross proceeds minus 6,000. So here I have to make two calculations. One is the normal gain calculation, and second one I have to calculate via 5 upon 3 into gross proceeds minus 6,000. If it is more than 6,000, then there will, if both are more than 6,000, then there will be normal gain computation. Then wasting non-chattels. Wasting means life less than 50 years. Non-chattel means either the asset is intangible or it is tangible but immovable. For example, copyright. Normal gain computed, but allowable cost is restricted to cost, like purchase price, multiply by P divided by L multiply by C. P is period of ownership, L is predictable life, C is the original cost. So to save the step, you can say the cost is to be calculated as on the other way around. original cost multiplied by remaining life divided by total life. Total life is the predictable life, and this is period of ownership. So I am deducting this from the total to get this. If you use this formula, you will directly get this one answer. So a time saving approach. Then asset damage thing. If the asset is damaged and the asset is not insured, there will be no insurance proceeds. If there is no insurance proceeds, there would be no disposal. If asset is damaged and you receive the insurance proceeds, you have two options. First, you do not use the funds in restoration of asset. Option two, you use the funds in restoration of asset. If you do not use the funds in restoration of asset, then disposal proceed would be insurance proceeds cost would be part disposal. But if you used in restoration of asset, then part disposal are normal, same as this one. Unless rollover election to deduct proceeds from cost of asset, unless the taxpayer makes an election to deduct proceeds from cost of asset. Then the concept of shares and securities. For shares and securities, if you have to find out the value of quoted shares, then the value of quoted shares is basically the average of ask and bid price. The value of quoted shares is the average of ask and bid price, and unquoted shares always given in exam. Then if you ever need to find out the cost of shares, the matching principle is used to calculate the cost of shares. To calculate the cost of shares, first go for the same day purchases. If there is no same day purchases, then look for the next 30-day purchases. If no next 30-day purchases, then look for the shares in the pool. Bonus issue and right issue. Bonus issue and right issue. Bonus issue increase number of shares at nil cost, whereas right issue increase number and cost, both the thing, in the pool. Right. So before I move ahead, I do want to look for your questions, if any, from the page number 3. So kindly show the formula of that slide. All slides, all of this stuff, all of this material would be provided to you. So don't worry about the material, like the material before my writing and after my writing, both would be available. So don't worry for the material, don't worry for the copy thing. All of that stuff would be provided to you guys. Done. Then no, the 30 days thing is for the 30 days thing is for the individuals only. I would be walking through over this matching principle while covering the company's capital gains. There is a change over here in the 30 days thing. I would be guiding to you, like I have to solve MTQ with you guys over the ACCA platform, so don't worry over that. No, that in case of copyright, in case of wasting chattel, this is the formula to calculate the cost only. The DP would be normal, the disposal proceeds would be normal. Just this formula is used to calculate the cost, and after deducting the cost, you will either get the gain or loss. It can be any of the thing. Not used in restoration. Not used in restoration is uh, like, I know one thing, to make this thing clarify, I'm using an illogical example, very clearly saying I'm using illogical example, but you guys would understand from this illogical example perfectly. The most common insured assets which we see in our life till this age group, till my age group, till your age group, that's the motor vehicle, right? That, and motor vehicles are exempt from capital gains. I know this thing, but to understand, to explain you guys over the insurance, I'm using this motor vehicle example. Motor vehicles, if assuming my motor vehicle is insured, and if my motor vehicle gets damaged, anyhow, my motor vehicle gets damaged, what will be the implications? The insurance company would compensate me for the damage. Now, I have two options for that compensation. First, I do not reinvest the proceeds in restoration. Option one. Option two, I use the proceeds in restoration. If do not use the proceeds in restoration, in this situation, disposal proceed would be the amount which I received from insurance company. Like the insurance proceeds is the DP. Cost, how to calculate the cost? Make it in this way. The driving side door of my car was damaged. Okay. In this situation, I purchased the overall car, not the right side door. So from a capital gains perspective, it is a part disposal, which would be calculated as market value insurance proceeds divided by insurance proceeds plus market value of remaining asset, or market value of overall car, multiply by original cost. So that would be the way to calculate the cost. If you use the proceeds in restoration of asset, in that situation, there will be part disposal. Unless rollover election to deduct proceeds from cost of asset is made. Like this election, what is this election? This is the place. What is the consequence of making this election? Your cost of car, add restoration expenditure less insurance proceeds. The differential is the and this is the thing which is referred below. Which is rollover election to deduct proceeds from cost of asset. So I'm deducting proceeds from cost of asset. Now this thing clear? I'm moving ahead. Then the concept of reorganization takeover. If there is a reorganization, you purchase the shares of company A. Please listen to this discussion carefully. You purchase the shares of company A and the company A is taken over by company B. Company B offers the shareholder of company A that give me the shares of company A and I will give you either share in return for your share, or either I will give you share and cash in place of your share. If there is a share for share exchange, there will be no capital gains tax disposal. Cost of original shares become the cost of new shares. Based on market value of shares received. However, you can elect for normal disposal. Whereas if the consideration is for cash and shares, there will be part disposal of the original shares, part disposal of the original shares. How to calculate the part disposal? Again via this format. Gain arise on the cash element of the consideration immediately. Rest, keep remember, whenever there is a share for share exchange, at the time of exchange, you do not pay the tax. When you pay the tax, whenever you dispose of the exchanged shares, But if there is a share for share and cash, so over cash element, you have to pay the tax at the time of exchange. Over shares portion, over share component, you would be paying the tax whenever you dispose of the shares. Then the next discussion, principal private residence. The concept of principal private residence is, the principal private residence is basically referred to your main residence. The main residence is the one in which the person lives. And obviously person can have only one principal private residence at one time. So one person can have only one principal private residence at one time. If you occupy your principal private residence throughout, whatever is the gain would be exempt. But if you occupy your principal private residence for part of period of ownership, not completely, for part of period of ownership, then calculate gain. You will get TPR relief, and TPR relief would be calculated as period of occupation divided by period of ownership. The property can be occupied. The property can be occupied into two ways. The property can be occupied into two ways. One is called actual occupy, and second one is called as deemed occupy. The deemed occupy means you do not actually live in the property, but from tax purposes, it is considered as you live in the property. From the tax purposes, it is considered as you live in the property. When it is considered as you live in the property, up to 3 years without any reason, if you are not living in your house, it is considered as you live in the property. Any period you are working abroad, it is considered as you live in the property. Up to 4 years working in the UK, in any other city, up to 4 years, it is considered as you are living in the property. Last 18 months of ownership, like last 18 months before disposal of property, it would be considered as you are living in the property, and it is always considered that you are living in the property. Conditions for A to C. What are the conditions for A to C? There must be actual occupation before and after. Conditions relaxed if reoccupation prevented by terms of employment. So then, can you let out your PPR? The answer is yes, you can let out your PPR. If you let out your PPR, then you will get letting relief. Letting relief is available for period of letting. In the letting relief, you have to calculate PPR first. So first PPR, then letting relief. Letting exemption is lowest of 40,000. PPR relief. PPR relief means this one amount. Gain that is due to letting. So the gains which is under the domain of letting, then consider that thing. Then keep remember one further thing relating to PPR. Principal private residence is not available on business use of property. Principal private residence is not available on business use of the property. So it's like uh, if you are doing business on your in your PPR, so to the portion you are doing, like make it in this way, there are 5 rooms in my house, and out of the 5 rooms, in one room I'm doing my business. So over one room there will be no PPR. The PPR would only be available on the 4 rooms. Okay, so make it a round calculation, like 1 out of 5 rooms is used for business purpose. It means 4 out of 5 rooms, if I calculate in percentage, so make it 80% of the house is used for the living purpose. So PPR would be restricted to the 80% thing. Done. I'm done with this. So any question from this page? Before I move ahead, any question from this page? If occupied last 18 months of ownership, if occupied, then it makes no difference. Like if occupied, then it's exempt. Whether like if you have occupied your house, that's not an issue. That is always considered as an exempt. But the issue is if you are not living in the property, then when it would be considered that you are living in property. Yes, deemed occupy is also part of occupied. So occupy, I categorized occupy into 2 categories. One actual, second one is deemed. So deemed is also considered as an occupy. Correct. Property is vacant for 5 years, then whole 5 will be taxable or only 2. If property is vacant for 5 years, then only last 18 months of the property, last 18 months of ownership would be exempt. Conditions for A to C must be actual occupation before and after. So for apart from part D of the condition, for A to C, there must be actual occupation before and after. No questions over reorganization. Why B is any period working abroad. So working abroad, is it? Yes, you can print out all of these notes once. That would be available to you guys, and expectedly that would be available after some time after the webinar. So all of that stuff would be available to you, and like I said earlier, it would be available to you guys in the form of before my writing, like in their original form, and in after the writing, so in this form. So in both forms that would be available to you. So that's up to you, whatever you want to do with them. Why B is deemed occupied, like any period working abroad. Working abroad, is it good for the economy? If a person is working abroad, not living in our own country, living abroad, is it good for the economy? The answer is yes. So it is always encouraged by the tax authority to go to work abroad. Don't do not worry about your PPR thing. Well, moving ahead, one of the most important reliefs. The second is called as entrepreneur relief. Entrepreneur relief. The concept of entrepreneur relief arises on qualifying business disposal. Qualifying business disposal is unincorporated business, complete if going concern, or when business cease within 3 years of cessation, or personal trading company shares 5% above, provided also an employee. So entrepreneur relief is available on majorly two, but subdivided three type of assets. First, unincorporated business, that is a sole trader business, and if you are selling your business as a going concern, it should be complete business. Like if my business is a going concern and I sell out one simple table of my business, one simple chair of my business, would I get entrepreneur relief? The answer is no. But if I seize my business and then dispose of the individual asset, then the disposal should be within 3 years of cessation. Then over the disposal of asset, I would get the entrepreneur relief. Or to the shares of personal trading company. What is personal trading company definition? Any company where I have shareholding more than 5%, provided also an employee. So both the things. Then for entrepreneur relief, there is a qualifying ownership period, and qualifying ownership period is 24 months. So there should be an ownership period of more than 24 months. That is 2 years. Relief is given on first 10 million pounds. So up to 10 million pound of gains are would qualify for the relief. Qualifying gains taxed at the rate 10%. Qualifying gains would gonna tax at the rate 10%. Can use losses and annual exemption against other gains first. So it is not mandatory to deduct capital loss brought forward and annual exemption against the entrepreneur relief gains first. So you can deduct these capital loss brought forward and annual exemption from the other gains. If 1 and 2, if these two conditions are met, then your gains are called as qualifying gains. If these two conditions are met, then your gains are called as qualifying gains. This is a limit of entrepreneur relief. Qualifying gains within the limit would gonna tax at the rate 10%. Qualifying gains within the limit would gonna tax at the rate 10%. Then qualifying gains treated as using basic rate band before other gains. So it is always presumed that the qualifying gains are using basic rate band before other gains. Okay. For 1920 disposals, entrepreneur relief, the timeline to claim entrepreneur relief is by 31st January 2022. The timeline to claim entrepreneur relief is by for fiscal year 1920 disposals, it is 31st January 2022. So essentially it is 12 months from 31st January after fiscal year. Then like a similar relief, a duplicate, a clone type of relief from entrepreneur relief. The name of the relief is investor relief. It is very important. I can say from my own experience that this time investor relief would be examined for at least 2 marks, like at least one MCQ would be there, or one part of MPQ can be, but at least 2 marks at least. Investor relief applies on the disposal of, please listen to this carefully, unlisted ordinary shares in trading company, shares subscribed for on or after 1st March 16. Subscribed for means it should be newly issued shares. means it is not purchased from the stock exchange. It should be issued by the company. Has been held for a minimum period of 3 years. Minimum period of 3 years by an individual, not an employee of the company. So the person should not be an employee of the company. Entrepreneur, sorry, investor relief is subject to separate lifetime limit of 10 million, separate lifetime limit of 10 million, taxed at 10%, taxed at 10%. Same prerequisites and entrepreneur relief. Same prerequisites like this point, this point, this point. These 3 points are same applicable over here. Okay. Please listen to my discussion very carefully. What are the key differences between entrepreneur relief and investor relief? Key differences between entrepreneur relief and investor relief. Key differences between entrepreneur relief and investor relief are, please listen carefully. For entrepreneur relief, there is no acquisition date limit. Like here, your acquisition should be after 17th March 16. There is no such condition for the entrepreneur relief. First difference. Second difference. Entrepreneur relief has a minimum shareholding percentage requirement, that is 5%. Investor relief has no shareholding percentage, investor relief has no shareholding percentage requirement. Third difference. For entrepreneur relief, person should be employed. For investor relief, person should not be employed. Three differences. Fourth difference. It should be unlisted ordinary shares, means unlisted company, whereas there is no such condition in entrepreneur relief. So it can be more than it can be an listed company as well. So I'm taking a pause over here. Any question from entrepreneur relief and investor relief? Claim period is also same. Like I marked these three things as common for the investor relief. Correct, and it is, this thing is mentioned over here. BRB stands for basic rate band. Okay, I would be sharing that shortly. The sequence of gains thing, and Amar Rahman, correct. Like this thing is mentioned here. Qualifying gains treated as using basic rate band before other gains. So the answer is yes. I will be sharing with you guys the order of the in which the band is consumed. I would be sharing that thing shortly. Then the concept of rollover relief. Like I have to make two summaries with you guys, so I would be sharing that thing with you over the summary. Rollover relief. The concept of rollover relief arises on the disposal of and reinvestment. Whenever you dispose of and reinvest the proceeds, on that time there is a concept of rollover relief. For rollover relief thing, two conditions. First, it should be qualifying asset. Second, it should be qualifying time period. First, it should be qualifying asset. Second, it should be qualifying time period. Qualifying asset: land and buildings, fixed plant and machinery, goodwill. Importantly, most important, like I like to highlight, it must be used in that trade. Like it should be your trading asset, it must be used in that trade. What is the qualifying time period? Qualifying time period is last 12 months before to 36 months after the sale. So you can say there is a total time horizon of 48 months for that reinvestment, which is like 12 months before and 36 months after the sale. It should be claimed within 4 years from the end of tax year. It should be claimed within 4 years. If partial reinvestment is made, what do you mean by the partial reinvestment? The concept of partial reinvestment is where disposal proceed where disposal proceed is less sorry where disposal proceed is greater than cost of new asset. On that time there is a concept of partial reinvestment. Whenever there is a partial reinvestment, a gain arise on the disposal of original asset, being the lower of the proceeds not reinvested, the chargeable gain. And the differential would be rollover relief. Okay, continue. If you reinvest in depreciating asset, depreciating asset for capital gains purpose means asset, any of the asset which has a useful life of less than 60 years. So that every such asset is called as depreciating asset. If the asset is depreciating asset, your deferred gain will held over until earliest of your replacement asset is sold, like new asset is sold, cease to use replacement asset in the trade, and 10 years from date replacement asset is acquired. It means if you reinvest your proceeds in depreciating asset, the maximum time period to which your gains will remain deferred is a 10-year period, not later than 10-year period. The maximum time period is 10 year, not later than 10-year period. And your deferred gain would taxable of would gain held over until earliest of 1, 2, 3 things. Keep remember. Before I move ahead, any question from the rollover relief thing? Yes, we would have two 10 million limits, one for entrepreneur relief, one for the entrepreneur relief, one for the investor relief, two 10 million separate limits. Newly issued shares after 6th April. No, it's after 17th March 16. How to share these things can be tell you guys better by the admin. So, but you will get these things. So the medium is my and ACCA attention. That should not be your attention. You will have that for sure. Don't worry about it. The partial reinvestment scene is assumingly you have disposed of the asset for amount of 100,000. You purchase the replacement asset for amount of 90,000. Make it in this way. You purchase the asset for 90,000. In this, is this thing a complete reinvestment or partial reinvestment? So let me write it if it's not clear. If complete reinvestment, if complete reinvestment, all gains roll over. And if partial reinvestment, the difference between normal gain and chargeable gain. Chargeable gain is the lower of proceeds not reinvested and the chargeable gain itself. And rollover relief would be the balancing figure. It's not after 12 months. If you look again over the qualifying time period condition, the qualifying time period condition is 12 months before, 36 months after the sale. So if this is my sale date of asset, so 12 months here, 36 months here. So total becomes 48 months time period. Okay. Then I have the discussion of gift relief. The concept of gift relief is for individuals only. It is not for companies, it is for individuals only. The concept of gift relief arises for qualifying business assets used in trade of unincorporated business or individual personal trading company. What is personal trading company? Where you have shareholding of more than 5%. Importantly, it is on assets used in trade of unincorporated business. Please keep remember, I don't know whether you guys are familiar with this terminology or not. From a capital gains, whether however you guys should have to be, if not, unincorporated means sole trader or partnership business, whereas incorporated means corporate business. Unquoted trading company shares, quoted trading company shares if own more than 5% interest. Quoted company shares if own more than 5% interest. Donny base cost reduced by gain deferred. Donny base cost reduced by gain deferred. Joint election 4 years from end of tax year of gift. For gift relief individuals only, the first point is disposal proceed would be the market value. Then the discussion continues. The disposal proceed would be the market value. Two conditions. First condition, it should be qualifying business asset. Second condition, joint election. So two conditions. First, qualifying business asset. Second, joint election. Joint election means the donor and donee should agree to claim the relief. Sale at undervaluation. sale at undervaluation. All such sales to connected persons are recorded at market value. Means disposal proceed would be the market value. If actual consideration is greater than donor cost, excess is immediately chargeable. Balance the defer of the amount. Means take it in this way, hypothetical numbers. Hypothetical number. Make it in this way. There is an asset which has a market value of 100,000. I purchased that asset for amount of, make it 60,000. I disposed of the asset for amount of 90,000. Like to a connected person. I disposed of the asset to an amount of 90,000. So for me, the disposal proceed would be 100,000. Cost would be 60,000. The gain amount 40,000. In this situation, is actual consideration greater than donor cost? Actual consideration was 90,000. So 90 minus donor cost. Cost was 60. So 90 minus 60 is 30,000 is the chargeable gain, and gift relief would be the balancing figure. Then, if there is a non-business use, can there be a non-business use? For example, if I talk about any of the asset which is to be used in the unincorporated business, make it a warehouse. Is it a business asset to be used in business? The answer is yes. If there is a warehouse which is like, which has some surplus capacity, and to take the opportunity to use the surplus capacity, I let out the warehouse. I let out the warehouse. So the portion which is let out is not business use of the asset. So gift relief would not be available on that portion, on the let out portion. Okay, it is on the business use element of the asset. So whatever your gains deferred would be restricted to business use portion only. If you have shares, whether quoted or unquoted, then gains, then okay, the shares refers the net assets of the entity. The shares refers the net assets of the entity. The shares refers the net assets of the entity. If there are some non-business assets in the balance sheet of a company, then in those situations, your gift relief would be reduced to the portion of, your gift relief would be reduced to the portion of business asset held by company. And how to calculate the portion of business asset held by a company? It is market value of chargeable business asset divided by market value of chargeable asset multiplied by gains. Gains is to calculate the business element, how much gains you can defer. Keep remember this thing. What do you mean by the word chargeable asset, and what do you mean by the word chargeable business asset? The word chargeable asset means any asset which is in the scope of capital gains tax is called as chargeable asset. Like motor vehicle is not a chargeable asset. Principal private residence, if occupied, is not a chargeable asset. Inventory is not a chargeable asset. Cash is not a chargeable asset. So chargeable asset means over which you are supposed to calculate and pay the capital gains tax. Chargeable business asset means the asset which is a chargeable asset, plus it is used in business as well. No, like I said, one person can have one PPR at one point of time. If gift is made by employer to employee, that would be covered under the ambit of trading income, not in the capital gain. Quoted shares means the shares, the company which is a listed company is called, and the shares of that listed company is called as quoted company shares. Quoted trading company means the company which is quoted, like listed, whose shares are traded on a stock exchange, plus the nature of the business is trading nature. Donor should not receive any consideration exchange that will be reduced or not. If donor not received any of the consideration, then whatever is the gain amount would be equal to gift relief amount and chargeable gain would be zero. Okay, two things to remember, and that would be important discussion kind of thing. Use of tax bands. Look into it very carefully. Use of tax bands. There is a single tax bands 0 to 37,500 basic rate, 37,500 to 150,000 high rate, and 150,000 above additional rate. The tax bands are used in a particular sequence. Keep remember. First, tax bands are used by the taxable income. First, they are used by the taxable income, and then they are used by the taxable gains. If basic rate is filled by the taxable income, then gains automatically shifted towards the high rate, additional rate. If taxable income is less than the basic rate band, then part of the gains fall in the basic rate would gonna tax at 10 or 18, and rest of the gains would gonna tax at 20 or 28. Within the taxable gains, there are three type of gains. Within the taxable gains, there are three type of gains. One of the gain is called as gains qualified for entrepreneur relief and investor relief. Gain do not qualify for entrepreneur relief, investor relief, which can be called as normal gain, Keep remember. First band is always filled up by this one. Secondly, the band would be filled up by this one. Okay. Within the normal gains category, normal gains can be divided into two parts. One is called as gains which pertains to residential property. Second one is called as normal gains. Now, over these two things, who would gonna cover the tax band first? Keep remember. This is like 2.1, like first this thing will cover the tax band, then this thing will cover the tax band. Whereas if I talk about annual exemption plus capital loss brought forward. From where we deduct these two things first? Okay, from where would we deduct these two things first? So it's totally my discretion. If it's my discretion, then I would use these two things wisely. The wise decision, the demand of wise thinking is it should be first deducted from here, then from here, then from here, because it has the highest tax rate, then this one, then this one. Okay, this is the first summary which I want to share with you guys. Second, reliefs. Reliefs can be categorized into two categories. First type of relief is called as deferral relief, like the reliefs which do not save your tax. It transfers the tax. It defers the tax. Second one is called as tax saver or reducer. These are the ones who actually saves your tax. The examples of deferral relief include rollover relief, including partial reinvestment plus depreciating asset then after the rollover relief then the tax savers reducers. Inter entrepreneur relief and investor relief. Second one is called as principal private residence, including letting relief. Principal private residence, including letting relief. I'm just sharing few of the names which are commonly used in the paper. This is commonly used in paper is hold over the gains under gift of business asset rules. So if this statement is mentioned, that is talking about gift relief, which includes sale below market value. That would be sale below market value. Okay. And for this thing, it is reinvestment of business asset relief under rollover relief rules. So These are the possible terminologies which are used to represent this. Keep remember, all of these reliefs needs to be claimed. All of these reliefs needs to be claimed, except of this one. This relief is automatic. This relief is automatic, and apart from this relief, all reliefs needs to be claimed. All reliefs needs to be claimed apart from this one relief, which is like automatic relief. No need to claim this relief. Okay. Any question from this page? Any question from this page? Okay. Second, capital loss. What to do with the capital loss? Two steps to done. Step one, adjust the capital loss with the gains of current year. So adjust the capital loss with the gains of current year. So if you have, let's say, gain in two assets current year, and if you have a loss in one asset, so that loss will be adjusted with the gains of current year. No restriction, nothing, and automatic. So it is an automatic thing. Step two, if loss in any particular year after step one means after adjusting the loss with other gains of current year, okay, then carry forward the loss against capital gains of future period. If loss in any particular year after step one, then carry forward the loss against capital gains of future period. That should be first available and maximum possible extent however, loss should be restricted to preserve annual exemption. So what to adjust first? First, adjust the loss with the gains of current year. If there is a loss in total, so carry forward the loss against future capital gains. Future capital gains first available, and after first available, make it first available, and it should be restricted to preserve the annual exemption. Okay, so coming back to the main theme. I'm done with the individual's capital gains. Now I'm moving towards the company's capital gains. So chargeable gains and capital gains, just a terminology difference. So no, conceptually no as such difference, but generally the chargeable gain term is given to any of the gain which is after deducting any particular relief kind of thing. Okay, which is particular relief kind of thing. And capital gain is normally the difference between disposal proceed and cost, is also called as capital gain. Take it in this way, the difference between capital gain and chargeable gain. Is there any difference between tax and taxation? So, okay, exactly. So same thing goes for the chargeable gain and capital gain. These are normally used interchangeably, but to be exact, the chargeable gain is normally the gain. Normally, it is referred to the gain which is after deducting any relief kind of thing which is available. Whereas capital gain is simply the difference between the cost and proceeds. Well, uh, chargeable gains for companies. Till now, whatever the capital gains which we are studying is for the uh, companies, is for the individuals. Right now, we are going to start for the companies. Summary of key differences for the companies. Tax paid. For company, the tax paid is part of the corporation tax. Whereas in individuals, there is a separate capital gains tax. Means in individuals, income tax is a separate thing, capital gains tax is a separate thing. Both has only linked to the extent of use of tax bands. Apart from use of tax bands, both the things has no link in between. Whereas for companies, capital gain is part of the corporation tax. It is like capital, the corporation tax includes the tax on capital gain as well. Annual exemption for companies, annual exemption is not available. For individuals, there is an annual exemption which is of 12,000. Indexation allowance available for full period of ownership till December 17. For individuals, annual exemption indexation allowance not available. Capital loss brought forward, offset in full. Restricted, so net gains is equal to annual exemption. Remember, loss restricted to preserve annual exemption. This thing it is referring to. Shares and securities. Index column needed, no indexation allowance. Different matching rules. And the only difference in the matching rule here is first same day purchase, second last 9-day purchase, and before last 9 day, all of the shares are recorded in the pool. Reliefs for individuals, many reliefs available. I just listed down all of the reliefs: gift relief, entrepreneur relief, investor relief, principal private residence relief. And the gift relief and rollover relief. But for company, there is only one relief, which is the rollover relief. And goodwill is not a qualifying business asset. QBA refers qualifying business asset. For individuals, goodwill is a qualifying business asset. For companies, goodwill is not a qualifying business asset. Okay, keep remember this difference. And the good thing is for companies, there is only one relief kind of thing, which is the rollover relief. For companies, there is no investor relief, there is no entrepreneur relief, there is no principal private, there is no gift relief kind of stuff. But there can be asset damage concept as well. There can be asset damage concept. There can be share for share exchange. There can be part disposal. There can be chattel, non-chattel. all of the rest of the things can be here. Rules for indexation allowance. Indexation allowance is based on increase in RPI over period of ownership. Indexation factor applied to cost enhancements cost calculation down to 3 decimal places except of shares. And how to calculate indexation allowance? RPI retail price index in the month of earlier of disposal or 31st December 17 minus RPI in the month of expenditure divided by RPI in the month of expenditure. If there is fall in value of RPI, the indexation allowance is nil, by the way. From this formula, I get the index factor. Index factor multiplied by expenditure amount. Index factor multiplied by expenditure amount is indexation allowance. If there is a fall in value in the RPI, indexation allowance is nil. By the way, in the paper, you can be provided with the RPIs and you can be provided with the index factor. Mostly, like make it 50-60% of the times you are provided with the index factor, and it can be possible that you are provided with that indexation allowance thing. Keep remember one thing regarding indexation allowance. Keep remember one thing regarding indexation allowance. Indexation allowance can reduce the gain to nil. Cannot create a loss. Loss can only arise where total expenditure is greater than net disposal proceed, and there would be no indexation allowance in such situations. Okay, indexation allowance. Then shares and securities. Matching rules. Same day purchases, previous 9-day purchases, shares in the pool. The difference is this second point. Whereas for individuals, it is the next 30 days. Whereas for companies, it is for the previous 9 days. Bonus issue. Not an operative event, just increased number of shares. No indexation allowance. Right issue is an operative event, increased number of shares and cost. Yes for indexation allowance. Reorganizations and takeovers, same as for individuals, just the concept of indexation allowance will be incorporated, will be embedded over here. Rollover relief. It is same as individuals except of goodwill is not a qualifying asset. Goodwill is not a qualifying asset. You have to claim within 4 years from the end of accounting period in which asset is sold. So the time period to claim the relief is within 4 years from the end of accounting period in which asset is sold. Either index factor would be given and if not, then RPIs would be given, but normally index factors are provided in the exam. Yes, so for matching principle, individuals in the second step, individual has next 30 days, whereas company has previous 9 days. Is this thing done? Okay. Any questions so far? So we can move on to the questions part. So I'm moving towards the question part, but before moving, yes, I know. Uh, but before moving on towards the question part, it, it's 9:49. Let's take a 11 minutes break and we will resume back in 11 minutes. So I don't have page over here. I have page over here. So mark it as here we have a break. We will resume at 10 p.m. after 10 minutes. Stop. Okay. Yes, I will share with you the WhatsApp group with you guys. Okay. I hope you guys can hear me. So let's resume. This is the questions, and again, like I said earlier, today we would be, I would be sharing, I would be doing one question over the. Hold on. So I would be doing 1 to 2 questions over here with you people, over like you can say a normal way out, and I would be doing one question over the ACCA practice platform as well, where I would be using, I would guide to use the scratchpad kind of stuff as well. Let's start with some of the MCQs first, then we'll move on to the MTQ thing. Okay. Uh, I need your support in the calculation of this. I need your support in calculation of this type of questions where I would be requiring the calculations. At in the meanwhile, I would really appreciate if any of you is logged in from the cell phone, please switch on to your laptop so that you can attempt the questions over ACCA platform with me. And in the meanwhile, do support me in the calculation as well. Okay, let's start this thing. Question 1. Habib purchased the copyright on 30th April 2003 for 31,320. The remaining life of the copyright at the date of purchase was 30 years. On 30th April 2019, Habib sold the copyright for 27,900. What is the chargeable gain or allowable loss for the tax year 1920 in respect of disposal of copyright? It is disposal proceed by the amount 27,900. Remember the formula which I wrote. Cost would be original cost 31,320 divided by 30 multiply by remaining life. Remaining life is when you purchased on 30th April 2003, it had a useful life of 30 years. You are disposing of the copyright after uh, 2019 minus 2003, 16 years means the remaining life would be 14 years. So the cost becomes 16416, 27,900 minus 16416. The difference is 16416. Sorry, typo. 16416. No, 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 no. 14616. 14616. 14616. 27,900 minus 14616. It is 13284. By the way, one more thing as a process note of this webinar, I have one thing in my mind. Uh, I believe the admin would have shared the WhatsApp group description with you guys. You guys can copy that. You can join the WhatsApp group. I will share a shared folder link with you guys over the WhatsApp. So you guys and all of your material would be shared with you people over the shared drive. So I would be sharing the today's stuff before class and after class, like pre-writing and post-writing type, you can say. And furthermore, I would be sharing today the tomorrow's stuff with you guys. So like there would be two folders. One you can say day one. In the day one folder, you will find today's stuff pre and post, like post class and pre class, and you will find the day two stuff as well. Admin will share with you the group link. Second, Paul gives an antique vase to his son for birthday. It has a market value of 7,000. Which of the following reliefs are available, if any? Can I have like as much answers as you guys can give me for this part of the question? Gift relief, okay. And I'm taking just 10 more seconds for your answers. The correct answer is none of the above. Okay. Rollover and entrepreneur is not a option. So because none of you quoted these two things, except of one or two, none of you quoted rollover or entrepreneur. So let's ignore these two. Gift relief for none of the above. Just tell me one thing. Remember, there are two conditions for the gift relief. The consensus of gifter and giftee. Second one is the asset should be business asset. Is the asset business asset? Is vase, antique vase, is a business asset? Like, is it used in trade of any of the business? So since it does not meet the condition, hence it's not a business asset. Okay. Then on 5th July 2019, David subscribed for new ordinary shares in Gardening Limited, an unquoted trading company. He works for the company and his shareholding represents 4% of company's ordinary share. He intends to continue working for the company and to own the shares for the next 10 years when he will give the shares to his daughter. Which of the following reliefs is available? Investor relief, entrepreneur relief, gift relief, none of the above. Okay, let me look into it one by one with you guys. Let me look into it one by one with you guys. Okay. Investor relief. Does these shares qualify for investor relief? Yes, no. These are purchased after 17th March 2016. Yes. Subscribe for newly issued shares. Yes, new ordinary shares. Subscribe thing. Then, uh, is he employee of the company? Is he employee of the company? So, for investor relief, the person should be employee or should not be employee. For investor relief, the person should not be employee. So, due to employee condition, due to employee thing, he disqualify for the investor relief. If no employment thing, then he perfectly meets the conditions for the investor relief. Okay. Does he meet the condition for entrepreneur relief? For entrepreneur relief, the person should be employed. Yes, he is employed. Shareholding duration should be more than 24 months. Yes, it is more than 24 months. But shareholding percentage should be 5% or above. Does he have a shareholding of 5% or above? No, he does not meet the shareholding percentage requirement, hence no entrepreneur relief. Then, gift relief. Would he get gift relief? Gift relief is available on three type of assets. Assets to be used in the unincorporated business, unquoted company shares, and quoted company shares having shareholding more than 5%. Does he qualify for the gift relief thing? Again, the question, a very good answer. The question is not whether they are going to avail that or not. The question is whether they are available or not. Like if the conditions are met, if it is a business asset, then the second condition is to go for the joint election type thing. But if the asset is not a business asset, you cannot even go for a joint election. So if the asset is business asset, the relief is available to you. Whether you go and take it or not, that's up to you. But it is available. Like investor relief is not available at all. Like I said over this page, all of the reliefs, all of the reliefs needs to be claimed except of this one. So you need to claim this one, this one, this one, this one, and this one. But if the conditions are not met, even they are not available to you for the claim purposes. So gift relief, yes, it is available. Whether they go for it or not, that's a second step. That's a different story. But it is available because, listen to my words and mark my words, because the shareholding requirement for gift relief purpose was with the quoted company, not with unquoted company. For unquoted company, it was like no restriction, no condition. But for quoted company, there was a restriction 5%. Just check out this thing, whether this company is quoted or unquoted. If the company is unquoted, irrespective of the level of shareholding, it qualifies. But if the company is unquoted, they will not. So the company is an, hence qualifies for the entrepreneur relief. Sorry, gift relief. Investor relief. He is employee. Should not be. Entrepreneur. Entrepreneur relief. Shareholding percentage is the issue. Gift relief, all okay. The second last simple MCQ, then we will move to the MPQs. Leticia makes the following capital disposals in the tax year 1920. A machine which she used for business purpose that was purchased for 8,000 and sold for 10,000. A greyhound which was purchased for 7,000 and sold for 15,000. A painting was purchased for 4,000 and sold for 7,500. Land that was purchased for 1,000 and sold for 5,200. Which of the capital disposals are chargeable to capital gains tax? Chargeable means not an exempt asset. One, two, and three. One, two, and three. By the way, so let's starting on a like LIFO type of basis. Is option 4 here? All of you agree? Option D. Sorry, option 4 here. All of you agree? Why fifth one is exempt? It is land. That 6,000 thing is for chattel. Land is not a chattel. Land is, chattels are tangible and movable. Is land a chattel? No. So point 4 is here. A painting that was purchased for 4,000 and sold for 7,500. A painting that was purchased for 4,000 and sold for 7,500. Is it an exempt asset? Is it an, no, it is a chargeable asset. So mark this thing. A greyhound which was purchased for 7,000 and sold for 15,000. Greyhound, tangible, movable. Yes, greyhound is tangible and movable. Life less than 50 years or more than 50 years. It is a vesting chattel. exempt from capital gains. It is exempt. Machine which is used for business purpose that was purchased for 8,000 and sold for 10,000. Is it exempt asset? For this thing, please listen to me carefully and keep remember this thing. If the disposal proceed is less than 8,000, if the disposal proceed is less than the purchase price, then it is an exempt asset for capital gains purpose. But if the asset, if such assets like machinery, anything which is plant and machinery, I'm talking about that only. If for plant and machinery, the disposal is greater than cost, the disposal is greater than cost, then over such things, we have to calculate the capital gains. If the disposal is less than cost, then exempt from capital gains, have to consider the capital allowance thing. Okay. So 1, 3, and 4, option D is the right one. Is this clear? It is a wasting chattel, and I'm not writing it right now. Like you would have the video recording, you would have the notes with you. So to the extent I feel necessary, I'm writing, but where, in my opinion, too much writing, I'm ignoring it. Greyhound. Greyhound is, I hope you are familiar what is Greyhound, right? Greyhound is a type of a dog. And for point one, in my opinion, I need to write a lot. Since we are requesting again. If plant and machinery disposal proceed is greater than cost, then it is chargeable asset. Disposal proceed is less than cost, exempt asset. So Greyhound is tangible, movable life less than 50 years, hence it is exempt. And it is not a plant and machinery, obviously. Owen has the following chargeable gains and losses for the tax year 1819 and 1920. 1819, 1920. What loss is available to carry forward to 2021? Welcome. First tell me, what is the amount of loss in this year? What is the amount of loss this year? 11,600. What is the amount of gain over here? 12,100. Remember, this is the loss which will be carried forward, and for this year, this would be a brought forward loss. Brought forward losses can only be adjusted to the extent they should be restricted to preserve the annual exemption. Annual exemption is by the amount 12,000. So your after loss gains should be, so to make this thing as 12,000. How much loss can I deduct from here? 100. What was the amount of loss which I had? 11,600 was the brought forward loss. Out of this, used in 1920 by the amount 100. I hope you guys would have enjoyed this question. Well, moving ahead to the MTQ, the first MTQ for today. Question 1, day 1, Hali and Trauma. And by the way, this is not my own question. It is from the past exam paper of March, June 2019. You should assume that the tax allowances for the tax year 1920 applied in previous tax years. Starting with an assumption. I will guide you guys as well that how to read the scenario, how to interpret the scenario as well. So do not Rahul, you can check in the comment box. Sorry, the admin would be sharing with you, or you can join. Admin would share the link with you. Hali and Goma. So focus on the way I'm going to read the question. So that's also important. Like remember, read the question carefully. So how to read the question carefully? Hali and Goma are married couple. Capital loss brought forward. Hali had capital losses of 39,300 from the for the tax year 1718. He had chargeable gains of 15,700 for the tax year 1819. Goma had capital losses of 9,100 and chargeable gains of 6,900 for the tax year 1819. She did not have any capital losses for the tax year 1718. Ordinary shares in Lima Limited. On 24 July 19, Hali sold 5,000 pound one ordinary shares in Lima Limited for 4.95 per share. Lima Limited shares have recently been selling for 5.3 per share, but Hali sold them at lower price because he needed a quick sell. Keep remember, if this like the things which should be clicked in your mind, if this disposal is to a connected person, it would be recorded at market value. And if this disposal is to an unconnected person, then record it at its cash price, at its proceeds price. So I will look into this. I will look into this. Whether the disposal is to a connected person or the disposal is to unconnected person. Hali sold Lima Limited shares, but Hali because he needed a quick sell. Goma, Hali's wife, had originally subscribed for 30,000 shares in Lima Limited at their par value of £1 per share on 28 July 2007. On 18th August 17, he gave 8,000 shares to Hali. On that date, the market value for 8,000 shares was 23,200. Hali and Goma will both dispose of their remaining shareholding in Lima Limited during the tax year 2021. However, they are unsure as to whether these disposals will qualify for entrepreneur relief. Antique table. On 11th October 19, an antique table owned by Hali was destroyed in a fire. The table had been purchased on 3rd June 2009 for 44,000. Hali received insurance proceeds of 62,000 on 12th December 19, and on 6th January 2020, he purchased a replacement antique table for 63,600. Hali will make a claim to roll over the gain arising from the receipt of insurance proceeds. Remember, unless election to roll over. Disposals by Goma during the tax year 1920. Goma disposed of the following assets during the tax year 1920, all of which resulted in gains. Qualifying corporate bond sold for 38,300, motor car for 11,600, antique vase for 6,200, copyright with an unexpired life of 8 years when purchased 5,400, quoted shares held within an individual savings account sold for 24,700. What amount of unused capital losses does Goma and Hali have brought forward to the tax year 1920? So I am going to reduce the I guess you can clearly see the scenario and the requirement. Appreciate if you guys solve this question, and like then I will be joining with you. Yes, what is the status? That good to hear that I the answers I started. Make your answer. Then we'll show the options. 23,600. So these are the options. Can I have more answers, please? Like, I'm really glad to see that all of the answers, all of the options are correct. So, do I need to solve why it is option D, or are you guys okay with the option D? Okay. I'm going to minimize it further. That would suffice. I hope you guys can read it at least. Capital losses of 35, 39, 300. 15,700 for the tax year. For Hali. 18, 19. 15,700. Gains are by the amount 15,700. Annual exemption is 12,000. So how much maximum loss can I adjust from here? 3,700. 39, 300 minus 3,700 is 35,600. I'm fine with 35,600. Okay, I'm okay with this Hali 35,600. What about Goma? Are you guys clear with the 9,200 of Goma? Uh, uh, Preserving annual exemption. Preserving annual exemption means you should have to restrict the loss, because capital loss is something which can be carried forward, but annual exemption cannot be carried forward. It is either to be used in current year or it would be wasted. So it would be better if you preserve the annual exemption. So option D principally is correct. Option D principally is correct. Just it should have to be 35,600. That's the typographic error from my end. So it should have to be 35,600. Okay. Now, second, what cost figure, what cost figure and value per share will be used in calculating the chargeable gain on Hali sale of 5,000 ordinary shares in Lima Limited. So what value per share and cost figure would be used? Tell me one thing. This 5,000 ordinary shares for 4.95 per share. 5.3 per share is the current selling price. Tell me one thing. Uh, is this sale to connected person or unconnected person? Because like I said, if the sale is to connected person, we will record the transaction at market value. But if the sale is to unconnected person, I will record the the proceeds amount, the cash proceeds amount. So what is the situation over here? Oh, if I would be in your capacity, in the student capacity, then my comment would be that I don't know, it's not specified. So whenever not specified clearly, then we will always consider it as unconnected person. So either of two things, either option A is correct or option B is correct. C and D is not the part of discussion at all. What would be the cost figure? What would be the cost figure? Goma, Hali wife had originally subscribed for 30,000 shares in Lima Limited at their par value of £1 per share on 28 July 2007. On 18th August 17, she gave 8,000 ordinary shares to Hali. On that date, the market value for 8,000 shares was 23,200. So it is like Goma purchased at £1. So Goma and Hali are spouses. It is transfer between spouses, always at no gain, no loss. That is at cost. So for Hali, the cost would be the 5,000 thing. Hence, it would be the first option. Then, in deciding whether Hali and Goma future disposal of their shareholding in Lima Limited will qualify for interplenar relief, which of the following statement is correct? Hali and Goma must be directors of Lima Limited. Both must be directors. The answer is no. The condition is of employee, not the director. Lima Limited must be trading company. Yes, entrepreneur relief is only available to trading businesses. Apparently, this is correct. Hali and Goma must have shareholding of at least 10%. No, it is 5%. The qualifying conditions must be met for a period of 3 years prior to the date of disposal. No, it's not 3 years. It is basically 2 years. So this is also wrong. So correct answer is Lima Limited must be a trading company. The admin would share you the link to join WhatsApp group, and I hope I pray that you guys, all of you guys, would be able to copy and join the group. What is the base cost of Harley replacement antique table for capital gains tax purposes? So I need to look for the scenario. On 11th October 19, an antique table owned by Harley was destroyed in a fire. The table had been purchased on 3rd June 2009 for 44,000. Harley received insurance proceeds of 62,000 on 12th December 19, and on 6th January 20, he purchased a replacement antique table for 63,600. He will make a claim to roll over the gain arising from the receipt of insurance proceeds. Okay, keep one thing in mind. Here the asset is not damaged, it is destroyed. Here the asset is not damaged, the asset is destroyed. So over here, the same working, same as for rollover relief, the disposal of old asset and the base cost of new asset. The proceeds would be Compensation received. How much compensation did I receive? Ali received 62,000. What was the cost? 44,000. 62 minus 44, the gain amount. Then the cost is 63,600 less rollover relief thing. 63,600 minus 18,000. The answer is 45,600. Option C. Done. Then the last question quickly. How many of the 5 assets disposed of by Gamma during the tax year 1920 are exempt assets? Samuel, what thing you are not clear? Like, this is the gain, and we are going to roll over this gain. Since it's a complete reinvestment, it's not a partial reinvestment, right? It's a complete reinvestment. So this rollover relief is deducted from the cost of asset. Then, how many of 5 assets, welcome, how many of 5 assets disposed of by government during the tax year 1920 are exempt asset for the purpose of capital gains tax? So you have to tell the number of exempt assets. The number of exempt assets are qualifying corporate bond. Is it an exempt asset? Yes. Motor car. Is it an exempt asset? Yes. Antique vase sold for 6,200. Is it an exempt asset? No. If the proceeds is less than 6,000, then it would be exempt, since the proceed is less than 6,000, not exempt. Copyright with an unexpired life of 8 years. Copyright exempt, no. Quoted shares held within an individual savings account, exempt. So how many exempt assets in total over here? Is this thing clear to all of you? Now, I'm moving towards the ACCA online platform, and probably I would be taking 5-10 minutes more, but that's important. So I request, like I said, please, those guys who are using cell phones, please open up their laptop so that you guys can also uh, practice with me over the ACCA platform. And I hope all of you would be, aware where you guys can get this thing. for capital losses. Oh, are you clear with, you are confused over the loss of Halley or Goma? Over which loss you are unclear? Okay. For Halley has gains of 15,700 in the tax year 1819. Done. Where's my pen? Where's my pen? Halley has gains of 15,700 in the tax year 1819. Done. What is the annual exemption amount? Preserve the annual exemption. Loss should be restricted to preserve the annual exemption. So, how much loss can I deduct from here? 3,700. Is this thing clear? My total brought forward loss is 39,300. How much loss is used in 1819? 3,700. If 3,700 is used in 1819, so how much loss needs to be carried forward to 1920? That would be 35,600. Okay, I'm moving to my Internet Explorer. Sorry, my Google Chrome, not Internet Explorer. My internet browser, and over this, I have my homepage. ACCA Global, past exam paper, shortcut. ACCA qualification, TX paper. Question practice platform. And like I said, I'm not going to solve complete paper. I will be solving only one part of the paper. Let's open up the practice exam question 1. Practice exam 1. Instructions, 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 and the perfect thing for a student like instructions. You want to give me instructions? That's your choice. I never ever want to hear the instructions. It's always we can learn by ourselves. Instructions. Starting the paper finally, and via the help of navigator, I'm directly moving to question number 16, the section B question. It's not capital gains. So again, moving to the navigator thing. I did. Honestly, I did. Don't understand what I see. This is the capital gains question which I would be doing right now. So let's start this thing. Kitten is the controlling shareholder in CAT Limited. An unquoted trading company. CAT Limited sold a freehold factory on 31st May 19 for 364,000, which resulted in chargeable gain of 12700. The factory, okay, sold a factory on 31st May 2019 for 364,000, which resulted in chargeable gain of 12700. So, like, this is the gain amount. The factory was purchased on 1st October 2005 for 138,600, and further capital improvements were immediately made at a cost of 23,400. During the month of purchase, further improvements to the factory were made during the month of disposal. The relevant index factor is 0.439. CAT Limited is unsure whether to invest the proceeds from the sale of factory. The company is considering either purchasing a freehold warehouse for 272 or acquiring a leasehold office building on a 40-year lease for a premium of 370,000. If either investment is made, it will take place on 30th September 2020. All of the above buildings have been or will be used for the purpose of CAT Limited's trade. Kitten. Kitten sold 20,000 pound one ordinary shares in CAT Limited on 5th October 2019, which resulted in chargeable gain of 142,200, which resulted in chargeable gain of 142,200. The disposal qualified for entrepreneur relief. Kitten had originally subscribed for 90,000 shares in CAT Limited. CAT Limited on 7 July 2010 at their par value. 90,000 at their par value. On 22nd September 13, CAT Limited made a 2-for-3 right issue. Kitten took up her allocation under the rights in full, paying 6.4 for each new share issued. CAT also sold an antique vase on 16 January 2020, which resulted in a chargeable gain of 28,600. For the tax year 1920, Kitten has taxable income of 12,000. What amount of indexation allowance will have been deducted in calculating the chargeable gain of 2,700 on the disposal of CAT Limited factory? What amount of indexation allowance? Okay. Okay. Indexation allowance is available on cost plus improvement till the date of 31st December 2017. Accordingly, indexation allowance would be cost 138,600 plus improvement 23,400 multiplied by index factor, which is 0.4439. So calculator, no need of scientific, use the standard 138,600 plus 23,400 multiplied by 0.439. That's 7,118. So 7,118. Is this 7,118 clear to all of you? Going to the next. CAT Limited. If CAT Limited decide to purchase freehold warehouse and make a claim to roll over the chargeable gain on the factory under the rollover relief rules, what will be the base cost of warehouse for capital gains purposes? What will be the cost of warehouse for capital gains purposes? Okay. We need to highlight it again. Purchase freehold warehouse. Okay. Disposal proceed of factory is 364,000. Disposal proceed of factory is 364,000. No need of cost. Gain is 120. $700. Okay. So cost of warehouse is from the sale of factory. The company is considering either purchase a freehold warehouse or acquire a leasehold office building on a 40-year lease. So cost of warehouse is 272,000. Tell me one thing with respect to warehouse. Is it complete reinvestment or is it a partial reinvestment? No, be very clear, please. For MC, scratch pad is not going to mark. It is your rough paper. So for MTQ, what matter is your mark, is your correct answer. So that's totally your choice. Cost of warehouse, partial. So whatever is your uninvested amount is your chargeable gain. And by the way, what is my uninvested amount? My uninvested amount is 364,000 minus 272,000. My calculator. Don't want scientific. 364 minus 272. So the uninvested amount is 92,000. So chargeable gain is by the amount 92,000. Rollover relief would be the balancing figure. 92,000 minus 120,700. It is rollover relief, the balancing figure amount 28,700. From the cost of warehouse, rollover relief would be deducted 28,700. The base cost is 243,300. So 243,300. That's my correct answer. 243,300. We can use a scratch pad roughly, but again, I'm doing rough for keeping in mind there are some persons with me who are understanding this. So if you don't want to do it properly, I don't mind. Again, this is an MTQ. For me, what matter is your last clicked option, not the process. So what if you don't want to make any of the working on the scratch pad, I'm okay. I'm okay with that. Not even me, the examiner is okay with that thing as well, because again, your scratch pad is not going to be marked. Be very clear, please. Moving to the next part. If CAT Limited decide to acquire the leasehold office building and make a claim to hold over the chargeable gain on the factory under the rollover relief rules, what is the latest date by which the held over gain will crystallize? Remember, if you dispose of the asset, the freehold factory, and if you purchased the leasehold office building which has a 40-year life, so it is a depreciating asset. And for depreciating asset, the deferred gain is taxable on the earliest of 10 years from being acquired new asset, new acquired disposed of, new asset use cease in the business. Remember, again, what is the latest date? So what is the latest date by which the chargeable gain, the held over gain will crystallize? 10 years from 31st May 19? No. The date when office building is sold? No idea. That would not be the latest date. 40 years from 30th September 20? No. 10 years from 30th September 20? The answer is yes, because it is the 10 years. This is the latest date. You can pay the tax before this, but this is the last date available. Next, what cost figure will have been used in calculating the chargeable gain on kitten disposal of 20,000 ordinary shares in CAT Limited? What cost figure would have been used? So for cost figure, this whole paragraph is relevant. Kitten had originally subscribed for 90,000 shares in CAT Limited. Okay. So I am making now rough working properly. Number, amount, number of shares, 90,000. Amount of shares, I purchased these shares at par value. So for this 90,000, 90,000. 22nd September 13, 243 right issue. 243 right issue means 90,000 multiplied by 2 divided by 3. Sorry. 90,000 multiplied by 2 divided by 3. that works out to be 60,000. So in right issue, you received 60,000 shares, and the cost of 60,000 shares is 6.4, 384. So my total number of shares 150. My total cost 384 plus 90, 474. 474 divided by 150. 3.16 per share is the weighted average cost of share. 3.16 multiplied by how many shares Kitten sold? Multiplied by 20,000 shares is equal to 632. Sorry, 63,200. It can't be 63,200. The last part, the last question of today. What is the Kitten capital gains tax liability for 1920? Kitten had origin, okay, chargeable gain of 142,200 and there is an antique vase taxable income of again CAT limited shares qualify for entrepreneur relief. This is for your understanding. No need, it's not part of the answer, okay? Not marked this. CAT limited shares qualify for entrepreneur relief as, okay, so it's clearly mentioned it qualifies for entrepreneur relief. So no need to use your own brains. ER, non-ER gains. ER gains is 142, 200. Non-ER gains is 28, 600. Annual exemption would be deducted from non-ER. Taxable gains 142, 200, 16, 600. Where capital gains tax would be 142, 200 multiplied by 10% plus 16, 600 multiplied by 20% as the remaining basic rate band would be covered by the ER gains before non-ER gains. So it would be essentially 16,600 multiplied by 0.2 plus 1,42220. 17,540 is the correct answer. So I'm done with the capital gains, not looking for the further area. Still any question from your side from today's class? Do let me know. I hope that you guys mostly have the WhatsApp group link right now. You guys have been joining the WhatsApp group. I'm not looking at the WhatsApp. So so if any of the guy is not able to join WhatsApp group today, because there is a first to you, because there is always a presumption that first band would be filled up by the gains which qualify for the entrepreneur relief, So the gains which qualify for entrepreneur relief covers the basic rate band first, then it would be then thank you very much. See you guys tomorrow, inshallah. The tomorrow agenda is about the inheritance tax and VAT. So tomorrow we would be covering, we have target to cover the 20 to 25 marks from the exam perspective. So see you guys tomorrow, inshallah. Take care of yourself. So I have dropped my number with you guys. So I hope all of you have it now. Okay. So once again, see you tomorrow, inshallah. Allah Hafiz. Take care of yourself. Welcome.